is what's going to happen with housing? Well, it's very likely that the events of the past 2 or 3 years have permanently broken the housing market, or at least broken enough where it's going to take maybe half a decade to fix. Why is that? Well, it's a combination of interest rates, market price of the house, and also the supply and demand. So let's take a look at what we're talking about here, because it's very likely that in 2025, the housing market will be so much worse than as opposed to today that people will look back at 2023 and say, I wish we were back in 2023. And you might think, how could that be? Interest rates are 7.2. Housing prices are average 450, 500. Why would you want to go back to that? Well, it's going to be worse in 2025. Here's the thing. Expect that in 2025, rates will be in the mid eights, and expect that the selling prices of homes will be at or slightly above where they are now. Now, it may not be a huge bubble on top of where we are now, but it's certainly not going to drop. And many, at least desirable homes, will start to creep up a little bit. For example, if you have a really nice house that's in a good area, good neighborhood, desirable municipality, and is in good condition, doesn't need a lot of rehab, it's not a fixer-upper. Let's say that house today, current market value, let's call it 440. In 2 years, the middle of 2025, that same house will probably have a market price of like 460, maybe 470. Not quite 10%. Many experts are saying 6% just in the next year. But let's just call it $15,000 or $20,000 plus another point on the interest rate. It's already bad enough now. It's at the breaking point. So where do we get that from? It's not one person's opinion. It's not just, this is my crystal ball seeing what's going to happen. It is what a lot of experts are saying. Here is a very highly touted financial expert saying that there's a real issue as to whether we've broken the housing market. The Fed has crushed both supply and demand. Mortgage rates are 7.2. So why does that crush supply and demand? It crushes demand because there's a lot less people that can afford a house at 7.2. And really, it's more than that now. It's really 7.4 as of today, as opposed to when it was 3 or 3.5. It's like twice the interest rate, which has a huge effect on payments. Add that on top of the fact that home prices, as opposed to 3 years ago, are maybe doubled. A 250 house in 2019 is probably now a 450 house. Not quite a double, but pretty close. Demand for mortgages has plunged to its lowest level. Here's another way that affects you. As there are fewer and fewer mortgage retailers, the people that you, or the companies that you see out there that are actually saying they're giving you mortgage, that makes the amount of money they need to make for profit higher and less competition. So a lot of mortgage retailers are, large mortgage companies. Think Countrywide, when they were a big deal. Think even Wells Fargo, Chase. There's a lot of big mortgage companies. They originate the mortgage, they do the marketing, the advertising, do all the work to get the paperwork done, the approvals, the appraisals, the underwriting. They originate the mortgage, which means they do the loan, fund the money for your home purchase, do the title, and then within a month or two, they've sold that mortgage to the government or to a security package. It's not their money still out there on the street. So what does that mean? Well, when there's lots of mortgage companies doing it, there's competition. They fight and scratch for every little bit of business. When mortgage demand has plunged, according to what this guy says, to the lowest amount since 1995. Was that 30 years? Then what's going to happen is you're going to have less volume, which means the companies that are still in business have to make more on each deal to pay their overhead, to pay their rent, their employees, right? At the same time, when there's less competition, that means you don't have to give as good of a deal, right? Because when they resell these mortgages, they sell them and get a profit. The profit is the difference between what they put on your contract for a rate. Let's say they put 7.4, but really the mortgage lender is willing to accept a rate of, let's say, 6. They make that difference. The other place that they make profit is mortgage companies are banking on the fact that you're going to pay your mortgage off early. You're not going to, you have a 30-year mortgage, you're not going to keep paying payments for 30 years, right? They don't want that. Here's why. Most of the interest is paid up front. So even though you have a 7.4% mortgage, if you only keep that loan for 10 years and then pay it off or move to a different house, guess what's going to happen? You're actually going to pay more rate effectively than 7.2, because at the beginning you pay more interest than you pay principal. The mortgage companies don't want you to be making payments in year 27 because that's all principal and they still have to service it, cost them the same amount of money. So they want new mortgages that are constantly turning over. Since that's not happening, they need to make more profit. All of that goes into what's called the rate spread between the Federal Reserve rate and the mortgage rate. That's why the mortgage rate's a little higher. That rate spread has always been, 1.5%, 2%. Well, now the mortgage companies have to have a higher rate spread because they know there's more underwriting costs. There's more there's less competition, so they don't have to shave as much to get a deal. And there's a lot less business. They have to cover their overhead on fewer mortgage originations. In addition, they know that the ultimate buyer, whether it's the federal government or it's a mortgage-backed security, doesn't have the same appetite because they're like, people are keeping these mortgages for a long time. So we don't want to get stuck with just principal payments. What does that mean for the mortgage market? What it means more than likely is that the rates are going to go up again. How do we know? Well, because the experts and professionals that do mortgages, another Fed rate hike. Even though mortgage rates stretch the limits of what home buyers can bear, another Fed rate hike is likely next month. This is August 28th. That's 2 days ago. No relief in sight. What does that mean? There's probably more coming after that, because the federal rate hikes are more than just about mortgages. They're also about controlling inflation in the economy. Inflation is still a thing. People still complain about the fact that their groceries are higher, their gasoline is higher, insurance rates are higher. That's all part of inflation. So they figure if they put some extra interest into the economy, it's going to slow down inflation. But at the same time, it raises up interest rates on mortgages. We'll talk about what that's going to do here in a minute. Jerome Powell, Federal Reserve Chairman, said that the strong economy is going to lead to interest rate hikes. The economy is not cooling as expected. We are prepared to raise rates further. When was this? August 25th, a week ago. So rates are going to go up. At the same time, you might say, well, if rates go up, then home prices have to go down. Why do they have to go down? Who sets the price of a home? The buyer or the seller? All the buyer can do is refuse to buy at a certain price. They can't make the seller go down in price. You can make an offer, but they have to accept it. Just because you look at that house and it's $450 and you say, I don't want to pay that much, I want to pay $380. Seller can tell you to go pound sand. They don't have to take your $380. The only reason they have to take it is because if it's the better option for them. What makes that happen? Well, there are some people that have to move. Maybe they got divorced. Maybe they changed jobs. Maybe they want to live in a different place. I get it. Maybe now they need a bigger house, which because they have kids or the people moved in with them. And we'll talk about that. That whole bigger house reason to buy a new house is actually going out the window. We'll talk about why that is here in a minute. But unless they really have to sell, $380. Look, I've seen houses like mine sell in my neighborhood all day long at $440. And the other thing is, big factor, if they sell that house, they have to move somewhere else. Now they don't have a roof over their head. They need a new roof over their head. So they're going to have to buy a house. So they're going to look in the market and say, well, what houses are there to buy? And when they buy that house, now they have to get a new mortgage. And the fact that their old mortgage was probably 3%, this is a broken record. We've talked about this. This is not new news. Means that they also have to now go back to the market and get a 7% mortgage. So why sell your house now if between commissions, once they look at commissions, look, commissions and closing costs on a 450 house is like 50 grand. You sell your house for 450, you're lucky to walk away from the closing table with 400 grand after you pay the real estate, closing costs, all your other stuff, not counting your mortgage. That's before you pay off your mortgage and buying your new house. So now you're down to 400, plus you want to upgrade from a 450 house to maybe a 650 house or 700 house, right? So now you have to pay interest, 7% interest on that 700 grand rather than paying 3% on your maybe 400 house. How much of a difference are we talking? Well, let's do some math. Let's do some math before we get too far along here. Let's not get crazy with guessing. Let's do some actual math. I'm going to pull up here on the screen our old friend mortgage calculator. Mortgage calculator. Mortgage calculator. Here it is. Google has a great mortgage calculator. So we're going to take a house that somebody, let's say they bought it for $240. And let's go back in time to 2018 and they have a 3% mortgage. What is their payment? $1,000. And that's really, maybe they bought a house for $300,000 and they put $60,000 down and their mortgage is $240. And you might say, well, they paid on it for 5 years. They still probably owe about $240. Their principal didn't go down much. So now here's this house. Imagine this, $240. They sell it for $450. Right? Let's do the math together. They walk away from the closing with 400 grand. They pay off their $240. How much does that leave them? It leaves them $160. Am I right? 400,000 minus 240 is 160,000. Great. They have 160,000 in equity. They can put it towards their new house. So now they buy a house for how much? 650. So they're going to go from 450 to 650. A 200,000 upgrade is not a whole lot. And matter of fact, let's even be more conservative than that. Let's say they're only going to go to 550. They're going to go from 450 to 550. It's only $100,000 more of a house. So they take their 550, they put their down payment against it of 160. How much are they financing? They're financing $400,000. Round numbers. I like to round things off. So you might say, well, gee, 400,000, that's only 1,700. That's not that much more. Well, we forgot to change the interest rate, didn't we? So let's go to 7.4%. Well, now you're talking 2,770. Almost triple. Their mortgage payment went from 1,000 to almost 3,000. And they're only going up 100,000 in house. They're not like getting 3,000 3 times the house. They're going from a 450 house to a 550 house. How much difference in house is that? So now they're thinking, gee, is it worth doing all this? Is it worth trading in my $450,000 house for a $550,000 house and going up from 1,000 to almost 3,000? Plus, in reality, you might say, well, it's only, 1,700 more. Well, it's not, because your taxes will be more on that 550 house. Your insurance will be more, right? So it's going to be really closer to $3,000. Now, what if they bought that 650 house instead? Now they're going to have 100,000 more mortgage. Now you're talking 3,400. So if you go to a $650,000 house, put down that 160 down payment that you got equity from your old house, now you're spending 3,500. It's more than 3 times. How many people are going to want to do that? Besides none. No one's going to be in for that deal, right? So let's fast forward a little bit more. Let's say somebody who is not currently a homeowner, maybe not a first-time buyer, but maybe don't have a house right now, and you're fast forwarding to 2025. How much house are they going to buy? Really, to get any kind of halfway decent house in most markets, you got to be close to 400 grand, 370, 380, right? If they are a first-time buyer, they probably don't have a huge down payment. So let's say it's a 380 house. They put down 30,000, close to 10%. That means they're going to finance 350. 350. And let's say in 2025, the interest rate is going to be 8.4. I do that right? 350, 8.4. So here's somebody who is looking at buying a house for 380,000. It's not going to be a mansion. It's not going to maybe not be your dream house. You're 2666. By the time you add taxes, insurance, maybe HOA, you're well over 3,000. Now, that's probably about the same or maybe even a little less than what they're paying in rent. So it's probably a good way to go. But first of all, you have to find a house that's $380,000. That's a decent house, which anybody who's played stalking on Zillow knows that it's not the easiest thing in the world to do. In addition, you have to find a seller, right, that's willing, and you have to go through the mortgage underwriting process. It's doable, but many people are going to get hung up on the fact of, well, maybe rates will go down. Maybe prices will go down. That's part of the reason that a lot of non-owners right now are in the position they're in, because in 2022 or 21, they said, oh my God, prices went up, rates went up. I'm going to wait till they come down. And now they've gone up even more, the prices and the rates. Well, I'll double down and I'll wait even more. Well, maybe not. Now, before we jump into the next thing about bigger houses, see this website right here, Homes Cheap? This is our website that we run that shows on a regular basis examples of houses you can buy for under 300,000. For those of you who have an alternate strategy for buying a house, what we call buy the cheapest house you can stand. If you are not currently a homeowner, buy the cheapest house you can stand right now. It may not be your dream house. It may need some work. It may have old carpets. We read an article the other day about somebody who didn't want to have friends and relatives over to their house for dinner because they thought their house was dumpy. Maybe the house is dumpy, but at least it's a house. At least your money is going towards getting closer to that principal payment, and you don't have to worry about your landlord not renewing your lease or jacking up your rent. So check that out when you get a chance. We don't sell anything. We don't make any money from that currently. So it's just a place to help people find houses. Last thing. What about that person who has a house that's maybe worth 450 and they're thinking about upgrading because they need more space, or they need nicer stuff, or they need maybe an extra garage space to park in, or an extra bedroom? Well, think about this. If you were going to do that and you were going to go through that exercise in futility that we just did, sell your house for 450, take off the commission, buy a house for 550, you spend $2,000 more a month. Why not do something different? Why not add on to your house? Not remodel, because when you remodel your house, all you're doing is taking a kitchen you already have and making a nicer kitchen. You're not adding anything new to your house. Yeah, you remodel, you put on new floors. We already had floors. Maybe you didn't like them, but you didn't add anything of value to the house. The house is probably going to be worth more with a nicer kitchen or floors, but you're not going to get your money back that you put into it. It's just for your own personal pride and satisfaction, which there's nothing wrong with that, to do remodels. Nothing wrong with that at all. But if you put an addition on a house, maybe you add on a wing that has an extra bedroom, maybe a bigger living room, maybe a bigger kitchen, maybe an extra bathroom. Now you have more breathing room. You have more elbow room. And your houses now have more square footage. How much is that going to cost? Well, as a builder, which we do consulting for building all the time. Here's our website, Secure Builder. Let's say you want to build 1,000 square foot addition in most parts of the country. If you do it right, if you really kind of fine tune it, you can probably get construction done for about $220 per square foot. So I know you're going to hate me on that, because if you're a builder, you're going to say, no, it should be 300, 350. You're probably right. Some places are 300. But in many parts of the country, if you really work efficiently and do some of the design work yourself and coordinate it yourself, you can probably get an addition for a couple $100 a square foot. So 1,000 square foot addition might cost you a couple $100,000. Well, even if you've got a second mortgage or a home equity loan for $200,000, your payments are going to be a lot less than it would be to add on, or, buy a house that's more, right? You're probably only going to add for $200,000, even at 8%, about $1,500 a month, right? And you can stay where you're at, kids in the same school. Look, it may not be for everybody, but it's something that people are looking at. As an example, how much is building a home cost, custom home? This is building a home from scratch, but the point is the same. The point is settling down is expensive. Average 30-year fixed mortgage hit a whopping 7.2%, right? Permits for future construction hit a 12-month high. There's the key right there. People are doing this. People are pulling permits for construction, additions, and remodels. Is the build really worth it? Here's everything you need to consider. And it goes through what the costs are, where are you going to build, and what you're going to buy. Maybe you buy some extra land. A lot of times in neighborhoods, there's infill lots where if you have a lot next to you that's empty, you could buy that and expand onto that. What are you going to build? You're going to need an architect, but you can buy pre-designs for cheap amount, right? You have to make sure that you have zoning and permits, but if you're adding on to your existing house, you already have zoning. The permits are going to be for things like setbacks. How far away from the property line can you build? Do you need more septic? Do you need more electrical service? Who's going to build it? If you just hire a general contractor to do everything, it's expensive. What are you going to run into for problems? Answer is lots of them, right? But that's the thing. By handling a lot of the build process yourself, and we talk about this all the time, and you can check out our website and even do consulting. We can tell you how to save 40-50% off of just handing over a job to a contractor. Contractors don't like to do certain things. They don't like to do things like coordinating with architects or third parties. They don't like also doing site cleanup. They don't like they like doing what their lane is. People say stay in your lane. There's a lot of things that an architect can do for you, but if you can arrange to pull those out of their workflow, a lot of times it can be a lot cheaper. So consider that as an option as well. So a add-on square footage project for your house, you can call it add-on project. You can call it an addition. Both of those start with the same three letters, add. You're adding something to your house, more so than remodel. Remodel is like a reboot of your house. Yeah, sure, it'd be nice to have granite countertops, nicer floor, upgraded kitchen, stainless steel appliances. But if what you have already exists and it's working, you're not adding anything. You're just adding to your debt or what you're spending, and you're adding on to the obligation to pay for that debt. Where if you add on space, your old house still might be old house, but those are things that are more cosmetic. Again, it's a personal preference. Some people just like to have always new stuff, right? I know you have an opinion about all this. I know you have an opinion about where the market's going to be in 2025. You may not think it's going to be where we just projected. Not even predicting, it's projecting. And we could be wrong. It's not like we have a crystal ball, like I said. It's just based on what the points are. If you draw a line to all the points, that's what it looks like is going to happen. The other thing that we think is going to happen is there's going to be a whole lot less people buying and selling houses. People are going to be hunkered down, locked in where they are. The sellers don't want to sell. The buyers don't want to buy. Just like they said, mortgage applications are way down from last 30 years, and even purchase transactions are down. You may see some inventory start to creep up, and you may see articles like the real estate market is crashing. Well, all that means is the number of sales is crashing. It doesn't mean that the prices are crashing, because to be honest, most of the people who are current homeowners, they're not going to sell their house for less than what they think it might be worth, unless they have to. And very few people have to, because everybody who has a house right now went through an incredibly hard scrutinizing underwriting process to get approval. Their income was checked, their job stability was checked, their credit was checked, right? Very few people are going to have a financial event that makes them a distressed seller. Some are. Some things happen you just can't get away from, but those are going to be few and far between. And the other thing is, building new houses is also grinding to a halt a little bit. Even though there's a lot of permits being pulled, most of them are for additions, remodels, a few new homes. But even the new homes that are being built, they're not being built on speculation. It's somebody going to a builder and saying, hey, here's my floor plan, here's my architect's plans, here's my lot, build me a house. So these are not speculative, subdivisions being built. There are still some of that, but that volume is coming way down. So the backlog of houses on the market, some people say there's 5 million houses that need to get built just to catch up with today, not counting what adds on in the next months and years. That 5 million, it would take forever to do that, right? Right now, they're still going backwards. They're still not building enough to keep up with the new homes being formed, households being formed, right? People that need a house. So that 5 million backlog is still going to exist. So, people aren't going to sell their houses for as cheap as what you think they might, or they should. Your house is not worth that much, too. Right? Only the seller can say what their house is worth. And if they don't want to sell it, they're never going to sell it. Yeah, sure. Some people die, get divorced, move somewhere else. I get it. But there's not going to be enough of those that's going to erode or diminish the market. Again, could be wrong. It's the end of August 2023. Let's replay this video a year from now, 2 years from now. Let's pull it up in April of 2025. And if you point at me and said you were totally wrong, maybe I was. But the idea isn't to like do day trading and put money into this. It's to use logical, rational projections to see what's most probable, what's most likely to happen. This is what's most likely to happen. Sure, a lot of things could happen. It could change it. But what's most likely to happen in the absence of other, black swan events is exactly this. Home price, 6%, 7% higher. Mortgage rates in the mid-8s. That is going to make the market grind to a halt even more than it already is. Again, I know you have an opinion about it. Make sure you write it below so you can vent. We can hear what you have to say, be heard in the marketplace.